This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices dipped on Wednesday as a soaring dollar made barrels more expensive, and Europe's biggest economy, Germany, was speeding up plans to wean itself off Russian oil while coronavirus outbreaks clouded China's economic outlook. Erasing earlier gains, Brent crude futures dipped $1.34, or 1.3%, to $103.65 a barrel by 13:53 GMT. U.S. West Texas Intermediate crude futures dropped $1.50, or 1.5%, to $100.20 a barrel. Russian energy giant Gazprom said on Wednesday it halted gas supplies to Bulgaria and Poland in a major escalation of Russia's broader row with the West over Ukraine.
Russia's Gazprom halted gas supplies to Poland and Bulgaria on Wednesday over their failure to pay in rubles, cranking up an economic war with Europe in response to Western sanctions imposed for Moscow's invasion of Ukraine. The state-controlled gas pipeline monopoly, which supplies Europe with about 40% of its gas needs, said transit via Poland and Bulgaria, whose pipelines supply Germany, Hungary and Serbia, would be cut if fuel was siphoned off illegally. Fears more states could be hit, in particular Germany, Europe's industrial powerhouse which in 2021 relied on Russia for more than 50% of its gas, sent gas prices soaring. Russia's move also added to jitters about the war's global economic impact.
Moving on to the top news in the energy sector.
U.S. crude stocks rose less than expected while fuel inventories continued to decline in a tightly supplied market, Energy Information Administration data showed on Wednesday. Crude inventories rose by 692,000 barrels in the week to April 22 to 414.4 million barrels, short of analysts' expectations in a Reuters poll for a 2 million barrel rise. Fuel stocks were down, as the United States keeps exporting products like diesel. Distillate stockpiles, which include diesel and heating oil, fell by 1.4 million barrels in the week to 107.3 million barrels, driving those stocks to their lowest level since May of 2008.
Russia may see its oil production fall by as much as 17% in 2022, an economy ministry's document seen by Reuters showed on Wednesday, as the country struggles with Western sanctions. The United States has banned Russian oil imports, while Western sanctions against Russian banks and vessels had crippled the oil trade, one of Moscow's key sources of revenue. The European Union is also considering fully banning Russian oil. The scale of the production decline would be the most significant since the 1990s when the oil industry suffered from underinvestment. Russian oil output started to decline in March and had fallen by around 7.5% by mid-April. Next, we have the top news in metal markets. China's gold consumption fell 9.69% in the first quarter from the corresponding period a year earlier, the China Gold Association said on Wednesday, as rising prices and a March outbreak of COVID-19 hit demand. The figure of 260.26 tons of gold was down from 288.2 tons in the first 3 months of 2021, the association said in a statement. Gold jewelry consumption remained robust in January to February, but that was shaken by rising prices and pandemic outbreak in some parts of the country in March, it said on its website.
Global demand for nickel is expected to increase to 3.02 million tons in 2022 from 2.78 million tons in 2021, the International Nickel Study Group, INSG, said on Wednesday. Global output of nickel is forecast to rise to 3.08 million tons in 2022 from 2.61 million tons last year, mainly due to expected increases in Indonesia and China, the INSG added. The implicit nickel market balance is a deficit of 168,000 tons in 2021 and a surplus of 67,000 tons in 2022, the Lisbon-based group said.
We will now look at the top news in the agricultural sector.
Indonesia widened the scope of its export ban on raw materials for cooking oil to include crude and refined palm oil, its chief economic minister said on Wednesday, leaving markets in shock over the latest policy reversal. The announcement flipped the minister's statement a day earlier, in which he had said the export ban would only cover refined, bleached, and deodorized palm oil. The change was in line with the president's decision and after taking into account the feedback and views from the people, Erlanger Hartarto said in a short statement.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.